Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like a reversion to mean and KISS trend following systems. We've been doing this over 20 years for individual traders like yourself and professional institutions. Okay, so let's get started here. First off, the last video I did for YouTube was on Monday, and so it's Wednesday. Time for a review, especially with the nice market rally we've had this week. This is a technical analysis market review for August 23rd, 2023. This is our back-end recording software for our website, so I'm going to go ahead and get this started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, August 23rd newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. By the way, I did add a few trade ideas. Also, we had some system trades today on the reversion to mean. They closed out with nice profits. Hopefully you guys were in those trades. I'll discuss that, the first couple charts, when we get to those below. But nice trades there. The market's had a good week this week. You know, today the S&P was up about 50 points. And that's off the highs. It was up more than that. It's up about 1.1%. Nasdaq up 1.5%. Russell up 1%. Even the Dow was up. And everything is up for the week now, except for the Dow, which is essentially flat. Remember, guys, the markets were extremely stretched, oversold coming into this week. With the NYMO and McClellan oscillators, they were absolutely buried and below their respective Bollinger Bands. Typically when you get that, you're very close to a mean reversion bounce. We also had moving average ribbons that were extremely stretched. Again, also mean reversion systems were long in first and second entries. So everything was stretched. The rubber band was due to snap back, and that's what happened this week, and especially today. Today the market gapped up, and it was a typical trend day. Now, if you've been a member of Breakpoint Trades, you know what I mean by trend day, but what that is when you gap up strongly in the morning, and then price rallies strongly all morning long into the afternoon. Usually maybe you get a pullback late afternoon, but that's on these trend days, you can pretty much buy the gap up, and that's what happened today. Also, NVIDIA reported after hours, and as you know, that stock is in fuego. They're up about 7% after hours. That also dragged up the Nasdaq, triple Qs. Microsoft, I think, was up $7. So Tesla was up. So it drove up a lot of tech things. So we'll see if we get a big gap tomorrow or not. But otherwise, as far as the market, like I said, we were looking for a rally this week, and that's what we've gotten. For now, we view this as some sort of wave B bounce that still likely has higher to go before it's completed. I have this illustrated on the 30-minute S&P chart when we get to that. And once that's done, we do favor maybe another move down again in C. Again, is it possible that the correction is over, the fourth wave is done, and we go right back to the highs? Yes, it's possible. But for now, this is what we're favoring. And today, or this week, TLT 20-year bonds have had a good rally. Remember, they were also extremely stretched. I talked about this on Monday. They were buried with the doji candlesticks. You had moving average ribbons that were extremely stretched, again, due for at least a reversion to mean bounce. And that's what we got. That's helped the market, and it's also helped the precious metals, some of the commodities. And a couple of key items still left this week. Again, we already had the NVIDIA today and other things, but initial jobless claims tomorrow. And of course, Fed Chair Powell speaks on Friday, Jackson Hole. Next, item number 2. So let's talk about our mean reversion systems. So these are 2 of the reversion to mean systems, had first and second entries on ES. The S-trap was in a first and second entry. You could see on the left. It had done a previous trade that was just a very slight winner there in early August to mid-August. They got out just in time. Then the market had another sell-off. It went back long again. Had 2 entries, and it exited today. We actually exited when the ES bar reopened at 6 p.m. I sent the trade notification out just after the ES bar had closed. I like to wait for these confirmations. Remember, guys, ES futures, Trades 23 hours a day except the weekends. It closes at 5 p.m. Eastern. It's closed for 1 hour, and then the new day's bar reopens 1 hour later at 6 p.m. So anyone following these would have triggered likely, at 6 p.m. And so we took that price, which was good because we got a further gap after NVIDIA earnings. But you can see that, and you can also see the QE Swing 3. First and second entry had much better entries there. Really nice gains on these. Congrats if you've done these. Next, item number 3 shows the mean reversion trades this year for ES futures. Again, we use MES, the micro contract. But you can see at the top, these two subsystems, they closed out. Anyway, the trade size I show here, 2 contracts for the first entry, 4 for the second entry. I double up the contracts for the second entries. So that's how I've always done it. But you can see the first entry for the S-Trap, even though it was quite early, still made about $160. Second entry made $1,000. First entry for the QE Swing made $500. Second entry made $1,700. So think about it, guys. If you did these trades, you'd have paid for a subscription to Breakpoint Trades for years. Subscriptions cost about $600 a year, $300 for 6 months. So just with these trade sizes, you'd have paid for the membership for about 6 years. So pretty awesome. Hope some of you guys did these. Again, if futures are not your cup of tea, you don't have to do futures. You could have easily bought one of the ETFs in place, SPY, SSO, UPRO. They trade well into the after hours market. As you know, they trade many hours before the cash market opens. So you don't have to do futures. You can always just follow these with the SPY ETFs. Okay. Next, let's move back to the general market. So item number 4 shows the index sector table, what transpired today and this week. Again, strong rally today, as you can see, very broad-based. Only all the major indexes up nicely, and everything's up for the week. Nasdaq's up 3 to 3.25%. S&P's up 1.5%. The only thing that's not up is the Dow. It's flat. As far as the 21 market sectors we follow, every one of them was up except one. XLE was down 1/4. So 20 sectors were up, only one was slightly down. And currencies, US dollar, pulling back off that resistance we've been showing. That's helping the market. And crypto was up today as well with the market. Commodities, not everything was up. Crude oil was down. Gasoline, sure no one's crying about that. Coffee, but otherwise everything else up here. And precious metals really had a good day. That area looked poised to bounce. Talked about that on Monday. You had doji candlesticks. The momentum was waning to the downside. It was very stretched. And so everything's rallied. You can see GDX up 2.8% today, 4.7% for the week. Gold up 1%. Silver had a great day, up almost 3.9% today, up 6.8% for the week. And bonds, that's what's been freaking out, folks. But they were very oversold. TLT 20-year bonds were very oversold. They looked like they were going to rally, and that's what happened. Up 2.5% today. The 10 and 30-year fell nicely. Next, item number 5 shows the economic news calendar, which I already discussed. Remember, we have initial jobless claims on Thursday. Fed Chair Powell speaks at Jackson Hole on Friday. And again, we're mostly through earnings, although we did have NVIDIA today. They don't really report with the other tech stocks that have reported weeks ago. Next, let's go and jump to the index chart. So image number 6 shows the 4 major indexes with just simple Bollinger Bands. Again, everything coming into this week was very stretched. You can see here, S&P and Nasdaq, Russell, all were trading below their respective lower Bollinger Bands. So that's not sustainable in the short term. So logically, we've got a nice reversion to mean rally this week. You can see the Nasdaq getting close to its middle Bollinger Bands. Next. Again, guys, like I said, things were very stretched coming into this week. I talked about it on Monday. Here's the percentage of stocks in the S&P that are trading above their 20-day EMA. It was up in nosebleed territory in July. You had a divergence there. And you can see every time it's been getting up into there, you've had market tops. Okay. Same thing this time. But it got very oversold. It got down to 15%. You can see this area here, kind of like a demand zone. So it was very oversold here, and we've bounced this week. Next, chart number 8, here's the advanced decline issues for the Nasdaq. And again, all these McClellan oscillators, like I said, were below their lower Bollinger Bands. Some of them below there for 3 days. Again, that's very stretched, and you can see produced a nice bounce. And again, you can see just a very simple guide. Whenever these McClellan oscillators get outside their Bollinger Bands, they tend to occur near market inflection points, highs and lows. They're not perfect, but overall, they give pretty good signals, and you had basically a buy signal showing up there, and that's played out. Next, let's move to the individual indexes. So chart number 9, here's the Dow. The Dow had this inverse head and shoulder pattern. We talked about that back in May. That played out. Dow pulled back. It didn't hold that horizontal level, which was a big level. Lost that. Still above this uptrend line, but this one's lagging. So money's been rotating back into some of these other areas. Anyway, this area, your main resistance now are the moving averages above. The 9 EMA is your first one, then your 20, and your 50. Next, let's move to our proxy, which is the S&P 500. Here's the weekly view of the S&P. Again, as you know, the S&P late last month got up at the upper channel that we had here, and this resistance area was just absolutely perfect area for a pullback. And you had the RSI divergence, and furthermore, you were coming into weak seasonality, which was August. We were looking for a correction in August, and we've gotten it. And you can see so far, S&P came down, it tested this demand zone, and has bounced off of it. All right. Also, remember I always state, watch these trend lines on the 14 RSI. Notice how RSI is trying to bounce off that trend line. I also talked about the moving average ribbon was pinching in a bullish configuration. Next, chart 11. Here's the KISS systems for the weekly indexes. Again, as we've been discussing, even though some of the dailies on the indexes had stopped out last week or earlier, the weeklies still had quite a bit of room. The S&P 4250. The Qs 342, the Dow, and so these still had a lot of room, and our thought was we weren't going to hit the weekly smart trailing stops on the weekly KISS systems. They were wide enough to account for a fourth wave. Next. All right, moving to the daily charts. Here's the daily S&P. Again, as you know, coming into this week, or coming into late last week, we got near this big level around the 42.25 area, 42.35. This was a big area. Previous big resistance last year was broken in June, became support on a back test. So it was an area to watch for a big support. And we rallied off of that last Friday. Big rally follow through this week, especially today. Okay. Now, what I don't favor is the S&P just rallying up and going to a high. All right. What I favor is maybe some, this is an A down, some sort of ABC up, and then down again, and then we have a better bottom sometime in, maybe the September timeframe, seasonality, and then we go up again. That's my favorite thing. Again, we'll trade whatever manifests, but that's my favorite view. Right now, you can see the S&P's rallied back to this little trend line, which could be a possible little resistance area, but really, you have the 50 and 20 MAs above, and that's your bigger areas. Okay. Also, note the moving average ribbons are now bearishly stacked. But again, we did have a logical rally off this big support zone. Next. Chart number 13, here's a zoomed in daily view. Again, as you know, this clean channel we've been showing, price stalled at the top of that channel there in late July. We had the RSI divergence, then we had an RSI trendline break there in early August. That all just played out beautifully. And look where prices bounced right off of this demand zone that we drew. Okay, nice rally from the lows on Friday into today. Notice the retracement. It's retraced about 38% from the highs. Okay, while that could be a high, what I favor, if this is a wave B, likely a move up to the 50% fib or 61.8 fib. Now, could it go straight there? It's possible. Like this. All right. The other thing that I think is more likely is, maybe a little pullback, then an up move, then down. So again, the initial move down is A, this would be wave B, then a C. So sometime on this rally, I'll be looking to take profits. Next, image number 14. Here's a half-day chart, shows you the same thing. We bounced off this demand zone. Another thing to watch, guys, is this uptrend line of the channel. This is now resistance. So if we were to gap up tomorrow, if we tag this trend line, this could be an area to take some profits. That's a logical area for the market to pull back. Again, that could be a high, or it could pull back, little small wave B and then go up. But this would be an area to take some profits, right? Also, I'm not going to discuss it much now, but you can almost see kind of how a slanted head and shoulders pattern could form here. Let's see if I got a... Again, it would be a slanted head and shoulder, but you could see how that could potentially manifest as well. All right, moving on. Chart number 15, here's the daily KISS trend system. Again, as you know, this went flat over a week ago. And remember on Monday, I talked about the 60 stochastic, the 50% area being big support. Look how we've rallied right off of that. Now, the ATR is big resistance, so that also could be a target over time if this is a wave B bounce. Okay. Next, chart number 16. Here's the 4 time frames. Remember on Monday I discussed the DeMark 13 on the daily, the DeMark 9 and 13 on the 130-minute, DeMark 9.5 day. I also discussed the moving average ribbons, how they were very stretched. You could see it there. And lo and behold, we've had a nice bounce. Now, the ATR on the half day and daily is your big resistance. Next, chart number 17, here's the 30-minute chart Steve showed last night. So one reason we favored an up move was because we had a bullish symmetry break here. The highs occurred in late July, as you know, and we had an initial pullback. The first largest rally was 66 points. Then we had a 55-point bounce. Then we had a 66-point bounce here over a week ago, perfectly matching the last one. And then the rally to here, 44.18, was 83 points. That's a bullish break in symmetry. So we were looking for a higher low, which we technically got right here. Little A, B. Again, like I said, if this is a ABC type pattern, remember they can take many forms. So, it's possible like I said, it's possible you just complete C here and you go right down. All right. But this could also be like an ABC, like a A of a B, and then you get a down, and then another kind of like a complex thing, then up, then down. So otherwise, this is our target areas, assuming this is some sort of wave B. 38% fib we've tagged, but usually wave Bs will do more than that. So 50%, 61.8% would be my target overall. Finally, chart number 18, here's a 5-minute view of the S&P. So again, I was long coming into today, but in the morning we got a gap here and we broke this trend line. When you get a nice gap like that, that's what I call a breakaway gap. Those are bullish. And then I thought that today could be a trend day, and that's what it was. So trend day, you can usually tell within the first 5 or 10 minutes when that gap is holding, especially if it breaks a trend line. So I bought a bunch of futures and UPRO, ETF, stuff like that, and had a good day. even chasing the gap. The way these trend days go, they'll gap up. You won't fill the gap. In fact, you'll rally strongly all morning long, usually into the early afternoon, and that's what happened. Okay, that's a typical trend day. Usually after trend day, the next day is a consolidation day. So we'll see if tomorrow is more of a chop consolidation day. Chart 19, here's the triple Qs. Again, they broke this little trend line yesterday, technically moved up today, but again, you have the 50 and 20-day moving average right here to monitor. Next. Chart 20, here's another daily view of the Qs. So first off, Steve discussed this last night. We had about a 33-point pullback from the highs. The largest pullback in the triple Qs uptrend from the October lows was 36 points set back in December. So we did not break long-term symmetry. Nice rally. But notice again, I still think there's potential for a lower high. But besides the two moving averages here, this broken trend line is now resistance. Moving average ribbon is also bearishly stacked and pinching. Next, chart 21, here's the triple Qs half-day chart. Again, bounced off this demand zone. You could also see how a potential little slanted type of head and shoulders could form here. Little left shoulder, head, right shoulder, potentially. Next. Chart 22, here's the KISS trend system for the Qs, the daily. It also exited, as you know, a while back. Nice bounce back. Again, the ATR is big resistance here. Notice also you had your 60 stochastic bounce off the 50% area, which I discussed on Monday. Chart 23, here's the 4 time frames, very similar to the S&P. Note that the Mark 13 you had on the triple Qs coming into this week. 60 stochastic down there around the 50% area. Stretched moving average ribbon, DeMark 9 on 130 minute. Again, everything was set up for mean reversion, and we got it this week. Next, let's talk about some individual FANG stocks. Here's Apple. Remember Apple, we've been monitoring this. Because it did have a bearish break in symmetry back here in early August, I've been viewing this as the next rally is a lower high. But this got very stretched. I'll mark this as wave A. We're working on a wave B. This wave B theoretically should form some sort of lower high. We'll see where it stalls at. It could be the 20-day, but more likely maybe the 50-day, and then down again in C would be my guess. Next. Chart 25, here's the 2-hour chart. Again, you had a beautiful MACD divergence there, RSI divergence. Nice rally. Again, it retraced almost 38%. Here's the fibs to watch. 188 for the 61 fib, 185 for the 50% fib. Finally, chart 26, here's the monthly chart. And where did Apple bounce? Right off that 9-month EMA. See that? That's your important support. But longer term, we have a big old MACD divergence long term. I do think that still has potential to play out. Again, over time. Remember, this is a monthly chart, guys. Next. Chart 27, here's NVIDIA. NVIDIA had a bullish pattern here coming into the day, and of course it's up after hours. It's up around, I think it was up around 505 the last time I looked. Next. Chart 28, Google. Steve had this as a long idea last night in his newsletter. Nice pop, and it was up after hours. Next. Chart 29, IWM small caps. So far, again, perfect sell-off right from the top of that pattern, which we expected, and also logical bounce off the 200-day moving average. Next, chart 30, here's the weekly view, also bouncing off this demand zone. Finally, chart 31, here's the 2-hour chart, again bounced off this demand zone. This isn't a great bottoming look though. Look at the MACD. So overall, this does look like some sort of, this doesn't look completely bottomed yet, but we'll see. If you are long, a simple stop could be just around that 200-day moving average. All right, guys, that does it for the market indexes. Let's move on. Chart 32, here's the VIX. I should expect down today. Remember, the VIX went on a buy signal on Friday when it closed back inside its upper Bollinger Bands. So technically, that was a buy signal, and that has played out nicely. Next. Chart Moving on to the sectors, Chart 33, here's XLK Technology. Nice rally as you'd expect from that little RSI divergence. Running right into the 20-day moving average. The 50-day is above. One thing to note, though, here's symmetry. Largest pullback was 18 points back into the January time frame. This pullback, 18.5 points. Could you say they're equal, or is that a slight break in symmetry? Maybe. Next, Chart 34, semiconductors also bouncing. Again, those moving averages above our resistance. Next, Chart 35, the banks or the financials finally put in a little bounce here. Next, Chart 36, the banks trying to put in a weak bounce so far. This sector's been quite weak, as you know, with those rates. Chart 37, transports also attempting to try to find support. It's this extended trend line. Remember, guys, extend these trend lines after you break them because they're often still important. Next, Chart 38, materials down around its 200-day moving average, could be an area to bounce. Chart 39, home builders. Remember, this was a short idea I put out last week that played out beautifully. Hopefully you took your profits as it's bouncing back. Though I do think this is also going to form a lower high on this bounce, so you may get another area to short if you monitor it. Chart 40, XLE Energy. This has been weaker lately. This did come off the lows today, but it was getting quite overbought. Chart 41, Oil Services. Also so far a little pullback. Remember a couple weeks ago I said momentum was waning as that MACD had crossed. And it's had a little pullback here, not much of one though. Chart 42, there's the weekly, again, pulling back off the supply zone. Though I do think that eventually it will fill this thin zone. Chart 43, here's ERY, that's the inverse ETF. Kind of a way to play a little pullback in that sector. And chart 44, here's the bullish percent energy index, BPDR. Still does not technically give a sell signal, but it's getting, you can see how it's right on these moving averages. So if a dip below here would give a sell signal. The buy signal occurred back there in early June. It was a good buy signal. Next, chart 45, DBC. So far just been chopping around, consolidating. It did find support of its 200-day moving average. If the dollar can pull back, that would help commodities. Chart 46, here's crude oil. Now, crude oil was weak today, despite commodities being okay. Still above its 200-day moving average, which is your big support now. Chart 47, natural gas. A flat day, still in this big old range. Now, what wasn't flat was some of these ETFs like UNG and BOIL. They are very tough traders, but I like how natural gas is consolidating here. Next, chart 48. Copper, so far, nice rally this week, up almost 2.8%. Bounced right off the support zone. Chart 49, DBA, also bounced off this uptrend line for now. Next, chart 50, Uranium, ETF, URA. Steve discussed this on the weekend, and it's had a nice week so far. Nice little pop today as well. Chart 51, Uranium on the monthly chart. Remember, it's been forming this big coil for the last year and a half, and I do think this could eventually have a really good rally. You can see how the moving average ribbon we're pinching is trying to curl up. Chart 52, here's CCGA, one of the uranium stocks, was on a nice pattern, broke out nicely on Monday. So far it's consolidating. And finally, chart 53, here's Quad U, another uranium stock. I showed this on Monday. Little pop today. Next, moving to bonds, chart 54, TNX 10-year Treasury yield. You can see so far down for the week. Where did it stop? Right at this previous high. Little double top area, logical area for it to pull back from. Chart 55, here's the daily. Again, you can see it got up near this area and pulling back now. But, you know, one thought, could this form a big cup and handle perhaps? And this is just pulling back and forming a handle? Something to think about. Chart 56, TLT 20-year bonds. Big rally today, up 2.5%. Remember I talked about this on Monday, a long trigger over this doji. It would have triggered yesterday. Really nice gain if you bought that yesterday. Now this area up here is big resistance. Next, Jabber 57, here's the 2-hour view, the further evidence that this was going to bounce. You had a nice wedge here on the 2-hour. It's been playing out. And finally, Jabber 58, here's the monthly view of TLT. Even though TLT is rallying right now, one thing to keep an eye on, this bigger picture, this potential 5 waves. I do think this still could play out. Once the bounce is over in TLT, it may want to work down to something like this. There's a big demand zone down here, wave 5. Next, Jabber 59, high yield corporate, nice rally back today. Here I drew kind of an ascending triangle that could be forming. Market likes to follow this very well. Next, Jabber 60, here's Bitcoin bouncing back a little bit after last week's sell-off. Next, Jabber 61, here's Mara. I talked about this. Mara had come down near this big demand zone. Had a lot of little doji candlesticks here. It was below its lower Bollinger Bands, 1, 2, 3, 4, 5, 6, 7 days. Was very stretched, and you were near the support zone. Was a low risk area to take a trade here. Next, Jabber 62, US dollar. Again, it's up in this supply zone, so logical area where it could struggle. Next, Jabber 63, there's the weekly chart. Again, it got up near this channel line, which is resistance. Obviously, it had a good rally for the last month and a half off this demand zone. Next, Jabber 64, gold, nice pop. This pullback did not take out the low, so this wouldn't be a simple zigzag. Could also form a coil of some sort, but nice rally today. Gold stocks outperformed a little bit relative to the metal. Still has work to do here, though. Jabber 65, here's the Japanese yen versus gold, and the two tend to be very correlated. A lot of times the yen leads, and you can see the yen had a little divergence here ahead of time. Next, Jabber 66, silver, big pop. Steve tightened this pattern up, so this is the pattern that may be forming now. Next, Jabber 67, GDX. Nice rally again. You can see GDX basically filled this gap, had these little doji candlesticks, so it really looked low risk this week for a bounce, and so far we're getting it. But again, it's got a lot of work to do, guys. Yes, we broke a little RSI trend line here. You had a nice logical trade here, but it's got moving average ribbons here. It's technically in a downtrend. It needs to form a higher low, stuff like that. But it was a logical area to rally from. Jabber 68, here's the 2-hour view. Nice rally here. By the way, a positive, at least since the July highs. You have a little symmetry break here, so that does give us some higher odds at a higher low forming on the next pullback, and then perhaps up again. Next, Jabber 69, here's the 60-minute chart. Again, you had a little MACD divergence coming into Monday. You can see MACD had curled up. Everything was set up here, and you can see we popped up nicely. Next, Jabber 70, here's the GDX with the GDX advanced decline. Just like on the indexes, it was buried below its lower Bollinger Bands, was due for a mean reversion, and that's what it's gotten. Let's take a look at some individual names. Jabber 71, Newmont. I showed this in Monday's newsletter at the bottom of this trend line, and it bounced off here nicely. Again, not up as much as the other stocks in the index, but it did rally off the support. Jabber 72, pause. It's a silver stock. Nice rally. Because we had a bullish break in symmetry here, I was looking for a higher low, and we got that. Good volume coming into it today. Jabber 73, CDE, silver stock. Little bounce as well, but stalled at its 20-day moving average here. Jabber 74, there's the weekly chart again. It had come back to this long-term support around the 2.5 area. Next, Jabber 75, AU. Steve had this last night. It had a couple doji candlesticks. Was very low risk here. Nice pop today. Up 5.6%. Closed above its 9 EMA. This puts it on target at least to tag its 20-day. Jabber 76, KGC. This is a nice one Steve had as well. Potential coil forming here. Jabber 77, SA, another one he showed. And finally, Jabber 78, MUX, another one. Really nice move off of this doji. Steve had this last week. Look at these nice move on this. Next, Charter 79, SIL, that's the silver miners. Basically double bottom bounce as well. So nice move there, guys. And let's move on. Look at some trade ideas, follow up on those. Charter 80, PHM. This is a home builder short from last week. It gave us a great trade. Hopefully you took some profits by now. Charter 81, PSHG, finally pulling back. This is that shipping stock. Had a hell of a move out of this base. Next, Charter 82, Oust. I said on Monday to watch this. It was light volume on the pullback to watch for it to bounce, and it did bounce a little bit today. Next, Charter 83, NXE, one from Monday. Still hanging in there, really good volume. Next, Charter 84, CLS was a long idea yesterday. Nice move, good volume, great follow through today on expanding volume. Next, here's a couple new setups, and I didn't find much out there, guys. When you have a big rally like today, it's hard to find a lot of longs. Market needs some consolidation for more patterns to show up, but here's PBR. Really nice bullish looking chart. Look at the MACD curling up. Look at the volume patterns, testing resistance. Charter 86, KSS, Coles. Technically, you have a three-wave ABC pullback, bounce off the 200-day moving average. Could be a long with a stop right there at today's lows. Charter 87, BLMN. Here's another one, last one, little breakout over this area. All right, guys, we'll see what happens tomorrow. Again, after a big trend day, a lot of times the next day is a chop day. Futures tonight, though, are up pretty nicely, up about 25 points on ES. Anyway, guys, have a wonderful evening. See you tomorrow. Take care.